Kaz here from Everyday Property Investing, and I wanted to give you today a bit of a peer over the shoulder view of a part of the property research process that I'd undertake when looking to buy a new property. Now, just to set the scene here, this is a fictitious example that I'm working through, and none of the, for example, the location I'm selecting, I've not looked into it in great detail. I've purely just chosen some information that I'm going to use as our sample exercise today. Now, we want to set the scene here. We're going to make sure that obviously before you get to this point of you're looking at houses, you want to have done a bunch of analysis and research first. So I'm going to assume here that I've thought about my own situation, I've assessed my finances, and I've come up with the particular strategy I'm interested in, and it's going to be, for this example, a simple positive cash flow buy and hold. And my available equity to use as a deposit, because I'm going to use equity, is $60,000. And this means I'm going to be looking at a maximum purchase price of about $240,000 if I want to maintain an LVR of about 80%, and I'm assuming 5% costs. So I've decided we're going to, also assume that I've done my research into the location, and I've chosen this location, which is Whyalla in South Australia, and the type of property that I'm interested in is going to be a house with a minimum of 3 bedrooms and 2 bathrooms. So that's our sample criteria that we're going to look at. The next step is I'm going to actually head over to a real estate website such as domain.com or realestate.com.au or Homehound, Real Estate View, whatever's the flavour of the month, and we're going to have a look in there for some properties that meet my criteria. So let's go and do that now. So here we are in domain.com.au, which I've headed into, and I've typed Whyalla in here. And I'm looking, we said our maximum price was about $240. Now I'm going to put about $300 in for the minute because, I might want to make some offers on houses that are a bit over the $240 mark. I'm going to put in that I want 3 or more bedrooms and 2 or more bathrooms. I'm just going to leave the car spaces open for the minute. I'm going to say I want a house. So let's search on that and we'll see what we come up with. Okay, so here we are looking at our Whyalla properties, and you can see I've got 8 properties found in Whyalla, including 4 in surrounding suburbs. So I'm going to have a quick look down the list at those 8 initially, just to get a gauge of what sort of price they're at, what sort of houses are. So I can see I've got $296,000 for something that's been renovated with 3 bedrooms, 2 bathrooms. And I've got 30 to 32, so neat and tidy masonettes on one title. So there's 2 properties on one title here, giving us 6 bedrooms, so it looks like they're probably 3 and 3, around the 220. Gee, that's cheap, isn't it? Under offer, under contract, under offer, under contract. Look, a lot of them are under offer by the looks of it, but it's quite interesting. And here's another one, same sort of example, I think, 2 to 4 O'Day Street, on offer, double masonette on single title. So it sounds as though the double masonette sounds to be a bit of a common occurrence in Whyalla. Here's another one here, double masonettes sold as a pair. Another 2 masonettes on one title. These ones are leased, so that's interesting. Be interesting to look at the amount of rent that they're getting in on those. And these ones here in surrounding suburbs, Whyalla Norrie, and by the looks of Whyalla Norrie, the same sort of properties, 2 masonettes on one title, 2 masonettes on one title, they're fetching a higher price on one title at the 250 mark, 242 mark. So it's quite interesting actually, isn't it? You get 2 properties on the one title, because that might fit in really well with our cash flow positive strategy. So let's take a look at what sort of thing. I like this idea of these 2 masonettes because I like the idea of 2 sets of income. So I'm going to have a look at those. Now, once again, remember, this is early in my process. So, as I'm going through, I'm asking myself lots of questions, and I'm thinking these are things I need to really investigate further. So looking at 30 to 32 Bevan Crescent there, it's 220. And just looking down there, it looks like 3 bedroom upgraded kitchen and meals, 3 bedroom upgraded kitchen meals. So there looks like someone might have even, just that there seems to be so many of these on here that have all just had a little update and all onto the market. I wonder if somebody's had a strategy and come in and bought these up, clean them up, turn them over. That could be the strategy of an investor somewhere. So let's have a quick look at the sort of place we're looking at. So it's a double house, if you like. Polished boards, a nice touch. Looks like, nice modern looking kitchen, so they've updated that. Pretty plain looking backyard and front yard, low maintenance, so that's pretty good for the rentals. yeah, I mean, they look quite, you know, clean and tidy if you ask me. So I like the idea of this. As I said, it kind of might fit in nicely with the strategy. It'd be interesting to see what sort of rental returns I'm thinking to myself. And the other thing is, I need to make sure that I understand. Theoretically, I've done my research into the Whyalla area, and I understand what all about the location and what the median prices are and things like that. But just to show you a little trick here in Domain anyway, and I'm sure this applies to many other websites, you can go in here and right next to where it says suburb, there's a little button that says profile. And if you open that up in another window there, you can see a free suburb profile report. So this, just looking at the map here, what I can see is Whyalla is here. Whyalla Norrie is this area here, because some of those results on our search page there were in Whyalla Norrie. So it looks like another suburb of Whyalla, really. Just looking through the sales data, they've sold houses versus unit sales in the last 12 months, 112 to 9. So it doesn't sound like there's many units in this location for them to only have sold 9 in the last 12 months. Highest price paid, $520. Geez, you'd be wanting to get a mansion there for that. Lowest price, $55,000. So they've got a good spread of things by the sounds of it in different price points. Looking at the median prices, this is what we're interested in here. Median price for a house looks like $246,000. Long-term trend 10.5. Now I don't know long-term trend, it must tell me somewhere, but I'd be interested to know what that is. I'm assuming maybe it's like a 10-year trend of growth. Auction clearance rates, days on the market. Looks like things sit on the market for quite some time in Whyalla. Vendor discounting at the moment looks to be at a high level at 12.9%. So that what that is it's telling you for the sale, the listing price, the majority or the average discount actually that vendors are actually having to come down to is 12.9% on that listing price. So that gives you an indication when you're looking at a listing price that perhaps you can take off a bit to account for that vendor discounting that's occurring at the moment. The higher that number is, the better a position you're in as a buyer, obviously. These are the median growth percentages. And down the bottom will give you links off to those research reports that you can actually purchase. You can click over onto this tab up the top here that says demographics, and it'll give you a picture of who lives in this location in terms of the age breakdown, country of birth, the type of house that it is, education, loan repayments for the area, marital status, whether people are buying fully owned houses, rented, what sort of jobs people have, religion, transport to work, things like that. So it gives you a little bit of a picture of that location. So armed with that knowledge, I'm going back to have a look over here. Now the one here that said fully leased, I was interested in if they told me the rental that they were getting. So here's our 2 masonettes on one title. This one's a 2-bedroom and a 3-bedroom. It gives me council rates, that's nice. Currently tenanted at $190 a week, both of those. So that's interesting too. Just to confirm that sort of thing, the other thing that I would do is head over to the rent area. Okay, so here's my rentals. I can see these ones here are very much houses that are very different to what I was looking at. I want to look for something that was quite similar to those masonettes. So here we go here. This looks like the thing that we're after. There you go, 2 and 4 O'Day Street. Now I think that was actually listed for sale over here somewhere. So there you go, 2 to 4 O'Day Street. So let's open up that one. So here's this one here, 2 to 4 O'Day Street, $215,000 on offer, under offer, but it'll give us a good indication. So it looks like, I haven't given us the breakdown per masonette here, but 6 bedroom, 2 bathrooms would, to me, mean it's 3 bedrooms, 1 bathroom each side, probably. And what we can see over here, they've got it advertised for rent at $180 a week. There you go. $180 a week, and it'll tell us maybe a bit more about it. Freshly painted, updated, blah blah. Yep. So that's interesting because we've got enough numbers there that maybe we could pop that into our cash flow calculator and just give ourselves an indication of, are we going to find the sort of deal that we're looking for in this area? So let's do that now. Okay, so here we are now in the cash flow calculator, and we're going to pop in our numbers here. So we're looking at 2 to 4 O'Day Street. Now I know that's already under offer, but we're just getting an indication of this area, and if this area can give us a sort of returns and things that we're looking for. So the purchase price, it's at $215, and there's about 12% discounting apparently, which means that theoretically we should be able to, or we may be able to get it for much lower than that. But what we might do is run the first scenario at the asking price, let's say. We don't really think we need a renovation budget because it looks like it's just been updated recently, and we believe we can get 180 per week for each one. Now the purchase costs are calculated in here at 5%. The LVR, it's 100% really because we are using equity, so for our deposit. So realistically, it's all borrowed funds when you look at it like that. So the full loan amount would be $225,000. I've got the interest rate at 8%, which is probably a bit high compared to what things are at the moment and the sorts of deals you can get now. So, but I tend to usually leave it higher than what things are so that I can just factor in things. We might bring it down to a bit lower because at the moment interest rates are quite low. Rates we saw were about $1,000. Body corporate, I don't think that's relevant here. Landlord insurance, we're going to have about $800. Repairs and maintenance, we've allowed $1,000. Vacancy rates in the area, that's an interesting one. We need to look that up. I'm going to leave it at 3% for the minute, but we do need to go and check that. Management costs, I'm going to leave those at 7.7 at the minute as well, and I would need to check what they are in Whyalla. I'd probably just ring an agency, and for the vacancy rate, I'd go and look it up in a magazine, at the back of a magazine. They usually tell you, or just online, you can do that. And we've got annual management fees calculated for us in the rental return. What we're looking at here, the yearly costs to us are about $20,000. The loss to us is about $1,800 because we've got rental coming in of $18,000. The cost to us is $20,000. If we use a tax rate of 38%, the tax on the loss is $716. So the depreciation amount, this amount here is a relic from whatever numbers we were putting in previously. I'm going to bring that well down. What you can do here is go and use a depreciation calculator or use a bit of your knowledge or experience. Now I'm going to put about 3,000 in because usually you can squeeze a bit out of any property no matter how old it is, and this one also has had some works done on it recently to do some updating and renovating, or minor renovations by the looks of it, like that fresh kitchen and fresh painting and all those bits and pieces. So I'm going to say $3,000 as a depreciation allowance for the minute. The tax on depreciation there is $1,140. So total in the door, as we set up here, rental return is $18,158. Looks like the cash flow here is about, we're negative 56 cents a week. So theoretically, we're looking at something which is pretty much neutral for us. Now, that's kind of where I was headed. I would like something that put a bit more money back into my pocket, but I could look at ways and means of doing that. We could look at, any improvements we could make to try and increase our rental return. I've got the capital growth considerations down here too. I'd be having to think about Whyalla in terms of its capital growth and putting in a figure that I think is realistic. Now, let's say in the next year, I really don't think it's going to grow that much. It's really maybe 2% if I'm lucky or something like that. So, but those numbers aren't too bad. If we did get some reasonable growth in this location, this would be a good little property to hold because it's not costing you anything. On the second sort of spot here, we can use this to run a separate scenario. So let's do a few more ideas here where we say, well, this time let's pretend that we get the property for $200,000 rather than $215,000, and if we could get $190 a week rather than $180 a week, then maybe that would help us with our cash flow situation as well. Okay, so we've put in the numbers for our second scenario where we're paying less for it and we're getting a little bit more rent for it. And what we'll see when we look at the numbers down here now is that it's now positive $23 a week or $1,200 annually. So this property looks good and I like it. So what I'm going to do is I will jump over to my purchase manager spreadsheet where I put in all the information about the particular properties I'm looking at. So here's my purchase manager spreadsheet, and I've got a number of tabs in here, and one of those tabs is the properties tab, and in this tab I list the properties I'm looking at. So I'm going to put Whyalla. That's where I'd list all the details of the property I'd looked at, and I tend to do this for all the properties I'm looking at and considering, because you just start to get mixed up about what you've looked at once you've looked at quite a number of them, and you end up doing the same calculations over and over for the same properties, unless you've got a record of what you're doing here. And you can also over here in this comment section make a record of what's going on. So this is my status, this is under consideration maybe. I might put a no in at some point in the future, and in my comments I might say no and why I said no, and that'll stop me from going back and reassessing the same deal over and over. Or I could put in comments here, put an offer in at this, blah blah. So there, I've stored it into my properties section. So as you can see, that's just a little look over the shoulder of a really small part of the research process that I might undertake when looking at something. We jumped on domain, we looked up our location, we found some potential properties, we assessed the location by looking at its demographics and its sales prices and things like that. We looked at what's for rent in the area. We got some key numbers that we could start to use to run some scenarios through our cash flow calculator, and then we recorded all the details back into our property spreadsheet so that we can keep a track of the properties that we're actually looking at and which ones we're going to pursue and the sorts of cash flow that they're offering us. Really important just to remember that there is a process that you can follow to make things better for you, to minimise risk, to maximise returns, to assess properties and to analyse properties, and this is a really small snapshot of part of that process, and some of the tools that you can use that are easily available and readily accessible to help you in your decision making process. So I hope that you have enjoyed watching this video and found something interesting in it for you, and I'll look forward to sharing more tips with you in the next video.